Hi, my name is Ko Fujimoto. Welcome to CHI Borders YouTube channel. Today's topic is about how green card abandonment affects your living trust. I mean, your US living trust. So let's get started. First, about the basic test that is something that I want you to understand. You have a domestic trust. Your living trust is most likely a domestic trust. But by abandoning your green card, the characteristic of your living trust may change. There are two tests: court test and court test or control test. In this video, this control test, US person has an authority to affect the trust. This is the critical test. One of the tests fails, then this domestic trust will be characterized as a foreign trust. So your next question is, what is a US person? Like I said, this is a definition based on the US tax law. Under the US tax law, US citizen, US green card holder, or certain individuals who are currently or may have lived in the States and meet tax driven rules such as 183 substantial presence date test. They will qualify as a US person. However, if you abandon, if you return your green card, then you are no longer a US person. So let's take a look at practical implications of abandoning green card. So let's assume this is you, a green card holder becomes a non-green card holder by permanently moves to a foreign country. I mean, it does not have to be a permanent, but typically you move permanently to a foreign country because you don't need a green card anymore and abandons her green card and become a U.S. non-domicile or U.S. non, well, to be really exact, I should use a U.S. non-resident, U.S. non-resident, not the domicile. So my apology for that, but to be precise, it's a U.S. non-resident. So if this happens, your domestic trust, your living trust, will become a foreign trust, as I explained in the previous slide, because you are no longer a US person, you fails the control test. So if your living trust becomes a foreign trust as a characteristic, and impact would be very, very significant. US tax law requires you to deem or treat your trust asset as if they were sold. If they were sold. So if there is any gain, then trustee, you must file tax return. In this case, 1040 NR non-resident because this trust becomes a foreign trust, meaning non-resident. And report the gain and pay taxes. And this is really amazing for a lot of you. Unbelievable taxation. And that's the first year. And then subsequent years, you, depending on what you have in a trust, you may have to keep filing 1040 NR or file 1042 withholding tax return. Most likely, if the trust income, as most of them are investment type of interest income, dividend income, and capital gains. Now, some of you may notice that this deemed sale taxed on unrecognized gain, unrecognized gain. Very similar concept here to US exit tax, the mark to market taxation. So, same concept applies here. But you may be wondering, Mr. Fujimoto, I have never seen, and I have a lot of friends who abandons the green card and they never file the 1040 NR for their living trust because the living trust became foreign trust, or domestic trust became a foreign trust, to be precise. It's because I think this is a rule that are very, very difficult for the IRS to monitor. Number one, the living trust does not have a tax identification number, right? Living trust typically is really you control. So anything happens in a living trust would be reflected under your social security number, but not the living trust itself has a control number. And therefore, unless this return comes in, IRS will have very difficult time in identifying who had a living trust and that living trust had appreciated assets that unrecognized or unrealized gain must be taxed. So I think that's the reason why this rule is it's very difficult to execute, monitor, enforce would be probably the right word. But that's the rule is the rule. It's there. So the other consequence is very important consequence is so assume that you have a living trust characterized as a foreign trust has a distribution after 10 years to your US person beneficiary, your children living in the United States. Well, this child has an obligation because of the foreign trust characterization. His obligation is he has to file Form 3520 to the IRS, and there is no minimum amount. So if he receives $1 distribution, he must file 3520. If you fail, then the penalty is $10,000. Very significant reporting obligation and potential penalty. Now, you may be wondering after I explain this tax rules, what should I do? I have a living trust and I don't want to go through this complicated procedures. So I prepared planning kind of a checklist for you, planning for outbound cross-border trust. And to be really precise, I should really name it as a planning for outbound cross-border living trust. And I'm not. I'm today. I'm talking about a very narrow, very common trust, very narrow trust for everyone. It's not just for very wealthy families, day to day, everybody, everyday person who gives up the green card, a lot of them have a living trust, and that's what I'm talking about. If you have any other trust, you must consult with uh, professionals, okay, because the impact may be huge. Anyway, getting back to the topic, first, let's review your living trust structure to see if the trust can remain a domestic trust after the expatriation. Right? Who are the trustees listed in the living trust? Is it just me or other person? Does it include any U.S. person? Consider appointing a U.S. citizen or U.S. resident trustee before abandonment of green card. So before you give up your green card, review your trust agreement, and if there is no U.S. person, try to appoint a U.S. person. Or this is too much, let's terminate the living trust before my move because there is no deemed sale. If I terminate before I abandon my green card, there will be no deemed sale. The asset comes back to me, and my or assets unrecognized gain really stays with me. But it may be subject to, obviously, U.S. exit tax, depending on the amount of the gain and the amount of your total asset size. All right. The other consideration is maybe you may be able to gift appreciated assets to U.S. person before your move or before you abandon your green card. And if the trust becomes a foreign, if the trust obtains a foreign trust characterization, you still have a 12 months grace period to cure the characterization. And if there is no cure, meaning after the 12 months, you must follow the US tax rules. Okay, so that is pretty much the explanation of how the abandoning US green card affects your living trust under the US tax rules. I did not mention anything about foreign tax rules because I don't know. And I did not really mention anything about the US trust law. I only mentioned about US tax rules about the living trust becoming a foreign trust. It's a very difficult subject to discuss, and this is my disclaimer. And so in this case, this disclaimer becomes a very, very important. Um, if a trust is involved, this tax rules gets very complicated. You should and you must consult with qualified professionals, maybe more than one type of professionals. Okay. Anyway, this is our 30 minutes complimentary online meetings links. Please feel free to utilize this link to ask us questions, and we enjoy and also we benefit from this meeting because uh, we know real situation and real examples, and that really help us to improve our knowledge and quality of our service. So please, it's a win-win situation. Please take advantage of it. And this is our contact details. We are located in Chicago, and phone number and email. So that's all. Thank you very much. Have a wonderful day. Take care.